those stocks that are based on hope.
In February of 2020, the stock market dropped by 30%. No one knew what was going to happen next. And as the situation unfolded, some brave investors decided to purchase everything, while others stayed out completely. Regardless of which one you are, Warren Buffett, arguably one of the most respected investors in the world, stayed out of the stock market almost entirely. Berkshire Hathaway, with its army of companies under its wing, did not make any acquisitions. Instead, Buffett did the exact opposite of what many investors expected him to do. He sold $4 billion worth of airline stocks, lowered his overall position in the banking industry, and simply watched the stock market from the sidelines with almost $128 billion in cash reserves. His actions, or rather inactions, confused and bewildered investors. But as we can see now, Buffett was simply waiting for the right deal. On July 5, 2020, Buffett made a $10 billion deal with Dominion Energy. As part of the agreement, he will purchase natural gas assets from the company. Simply put, in this deal, he will pay Dominion Energy $4 billion in cash, assume and pay off $6 billion worth of Dominion's debt, for a total payout of $10 billion. In exchange, he will now acquire 7,000 miles of natural gas pipelines, hundreds of natural gas storage plants, the workforce needed to operate these assets, and partial ownership of transport facilities to ship these resources internationally. The question you should be asking now is, does this deal actually make sense? What is natural gas? And should you bet on Berkshire stock? In this video, I'm going to answer these questions. But before that, make sure to check out my other videos on the recent $2 billion Wirecard fraud, the $100 million Joe Rogan deal, and why the stock market is not the economy. Berkshire Hathaway spent $10 billion in natural gas pipelines and containers. To really understand this deal, we need to understand what natural gas is in the first place. Natural gas is mostly methane along with other elements that create energy when burned. They're stored deep beneath the ground, and luckily for us, the United States is blessed with an abundance of this resource, estimated to last the next 90 years. And you can use natural gas to heat up water supplies, power stoves, run industrial equipments, and most importantly, generate electricity for power plants. Natural gas already powers 25% of the electricity used in the United States, and that ratio is estimated to increase in the future. In fact, the demand for natural gas has been growing, while other resources like coal has been going down. To really understand how profitable the natural gas deal really is, we need to understand the natural gas industry and how it works. As a natural gas explorer, you must first go out and locate pockets of land where there might be an abundance of natural gas. Once you locate these areas, you drill deep underground to get the methane out. And once everything is said and done, you now have a problem. Your drilling company doesn't have the infrastructure in place to transport the gas. And this is where Buffett comes in. With the deal, Berkshire purchased the pipelines, storage facilities, and export centers needed to move the natural gas across Northeast America and parts of South Carolina. As you can see, he doubled the number of states he served from 11 to about 20 after the acquisition. The black lines here represent the pipeline infrastructure, and the yellow dots represent Clove Point, which is an international transport center that Buffett now owns 25% of. The gases will be pumped and moved by Buffett's pipelines to his storage centers and sent off to power plants for use, or to be exported and also sold internationally at Cove Point. And now I hope you see the magic of his deal. Buffett is charging drilling companies a fee every time they use his pipeline, storage facilities, and export centers. He now holds a monopoly over these key infrastructures that power 25% of our country. This deal will increase his control from 8% of all natural gas movements in America to about 18%.
These operations are really going to spread kind of their hold in the natural gas transmission side of things. And it really underscores sort of how Buffett is willing to now finally pounce.
Buffett might control 18% of all natural gas movements in the United States, but is this deal financially worth it? To start off, Buffett uses 3 simple rules before making any investments, and we can apply these rules to the natural gas deal as well. In his own shareholders letter, Buffett has stated that he will only invest into a company if the company makes more money than it spends, is managed by honest managers, and the price of the company is currently reasonable. You purchased Dominion's pipelines that generated about $1.3 billion of net income in 2019. You did your research and made sure the company did not face any major scandals. And you also purchased these assets at a reasonable price compared to other deals. On the other hand, Dominion needed this deal. On July 5, 2020, Dominion canceled its Atlantic Coast Pipeline project. This is a 7-year project that started in 2013 and is now officially scrapped. The original goal of the project was to run 600 miles of natural gas pipelines from West Virginia to North Carolina. And with this project, you could essentially supply and deliver energy to millions of families, businesses, and schools in West Virginia, and also North Carolina. But unfortunately for you, Dominion was forced to cancel the plan because of delays. Local environmentalists and regulators forced the project to be extended into the late 2020s, increasing the cost from $4.5 billion to a projected $8 billion by the time it finally finishes. In this situation, the company cut its losses, trashed the project this year, and saved $3.5 billion in future expenses. The company has officially stated that it did this to achieve a net zero emission by the year 2050, with a focus on wind, solar, and hydro. But costs and delays also play a big factor here too. Dominion wants to be in tip-top shape, and cutting this project and selling its other assets to Buffett made sense. The goal of the company is to be cash heavy and also more nimble. As a viewer who is still watching this video, I hope you can see that both parties are winning from this transaction. The deal helps Buffett earn a monopoly in the energy transportation industry, and Dominion now has $4 billion in cash to invest into zero energy power sources. However, more recently, many investors have addressed some issues with Berkshire itself. The company's overinvested into Apple. It sold airline stocks just before the stock prices climbed up a week later, and the stock price of Berkshire hasn't really moved at all since the virus. Berkshire Hathaway is a holding company, and the company basically acts like an investor. It's in the business of buying up companies and reaping the rewards and taking on the risk. You can see the list of businesses directly under Berkshire's control here, but not all companies that Berkshire has purchased are listed here. These are only companies that Berkshire has more than 50% control over. I want to show you this because it's important for understanding why Berkshire is actually more diversified than you think. The company has less than 50% stake in major companies like Apple, Amazon, and Coca-Cola, and these companies don't actually show up here. Instead, they're considered investments. The largest investments held by Berkshire is actually listed here, and you can see that these 10 companies make up 87% of the entire investment portfolio, and Apple itself actually makes up 43% of this entire pie. By no means is Apple a small investment for Berkshire, but it's actually not as big as people think. Investments, or a company that Berkshire has less than 50% of its stock in, only generate a small portion of the company's overall earnings. You can see that in 2019, Berkshire made about $326 billion in returns. The companies that it owns more than 50% of made about $253 billion. And the companies that it does not have more than 50% of its stock in made Berkshire about $72 billion. And out of that $72 billion bucket, Apple only accounted for $30 billion, or 9% of the total return. Basically, even in one of the best years for Apple, the gains from Apple accounted for only 10% of the total earnings by Berkshire. Instead, these companies are really the ones that are driving a return for Berkshire. Don't get me wrong, Apple is still a significant holding, but it does not account for 43% of the earnings like some people assume. In fact, Berkshire is actually well diversified, and you can see that most of the money that Berkshire makes come from wholly owned companies in sales, insurance, and leasing industries that account for 78% of the total return. Apart from this, many people also criticize Buffett for his move to sell his stake in airline companies. But if you really think about it, this move follows his basic principles. We know that he only invests into companies that are self-sustaining, and the truth is many of these airlines are no longer self-sustaining. You know that airlines make about 75% of its profit from business travelers, and business travel is now replaced by Zoom calls. Airlines must also spend more money to operate in this post-virus world. Basically, the razor-thin margins of the airline industry might not hold up. You can still bet on airline stocks in the short term, but based on the philosophy of Warren Buffett, these companies are now dead weight. Therefore, it made sense that he sold his airline stocks. He simply didn't think these companies are worth the trouble in the long term.
I would make no promise to anybody that we will do better than the S&P 500, but what I will promise them is that I've got 99% of my money in Berkshire.
Whether you agree with him or not, Berkshire is really planning for the future here. The cash reserve from Berkshire is huge. In 2019, Iceland had a GDP of $24 billion, and Buffett's cash pile is 5 times that of Iceland's GDP. And you know that he's going to use his cash pile in the future to make some big purchases. The company's valued at $212 by 4 analysts, and the stock will move up in the long term. Out of the top investments made by Berkshire, the most profitable ones include American Express, Moody, Coca-Cola, Wells Fargo, and Apple. You can say that Buffett is a great stock picker because he doesn't speculate. Instead, he's looking for cash flow. And you can see here that his cash flow has been increasing in a nice steady pace. In 2019, his company actually generated $35 billion in cash. Betting on Berkshire stocks is one of the best things you can do for yourself in the long term. It's going to protect your wealth and also make you a fairly consistent return over time. Make sure to like and subscribe to the channel, and also check out other videos on economics, investments, and also stock market stories. Thank you guys so much for watching, and I'll see you all again next week.